we had ex-CIA operatives providing security for us. This year is our first year of positive cash flow and positive earnings.
Today, we're in the beautiful city of Quebec, Canada, and we'll be going for a run with the CEO of Gold Royalty Corp, Mr. David Garofalo. With gold being at all-time highs in 2024, Gold Royalty is a way to gain exposure to this investment, and we'll be looking into what makes them so special in this interview. Today, we're going for a run with David Garofalo, CEO of Gold Royalty Corp. Dave, good to have you with us today.
I'm delighted to be here. What a beautiful day.
Such a nice day in Quebec City right now. We're here for the mining investment event of the North. I'll go right into it, David. I want to know, what is your background? I know you worked for Deloitte as an accountant. You also worked for major mining companies. What's your background and why did you decide to pivot to a startup royalty company?
Well, my background is a CPA. I did my accountancy at Deloitte back in the late 1980s. And then I joined Inmet Mining on the base metal side in 1990 in a very junior accounting position and worked my way up to treasurer. And then Agnico was looking for a CFO. Spent 12 years there and we built 6 mines and I was part of the mine building team.
It was more operation, right?
Yeah, operational, commercial, feasibility study work, helping go up to tender for major contracts on construction. Then Hudbay was looking for a CEO and I joined them in 2010 and built 3 mines while I was there. Constancia in Peru, Lalor and Reed in northern Manitoba, and acquired the Augusta project in southern Arizona.
Right.
And that's still part of their pipeline right now. Then Goldcorp came calling in late 2015. I joined them as CEO until we completed the merger with Newmont in 2019. And at that time was the biggest gold merger in history. That's since been eclipsed by Newmont taking over Newcrest, ironically, 4 years later. But after having done that for 33 years, building and operating mines, seeing that gold was poised for a good run, just because inflation was starting to accelerate.
Yeah.
I thought, well, I want to be running a gold vehicle, but I don't want to be running an operating company that's exposed to inflation.
Yeah.
And so that's the great thing about a royalty vehicle is that it gives you that top line exposure while protecting you from inflation and operating capital costs.
Right. So let's talk a bit about that. Some people buy gold, physical gold. How would you compare, investing into a gold royalty company versus buying gold? We all know gold has hit all-time highs recently. The general public is getting more interested. You'll see there was actually some gold bars getting sold at Costco. I think I saw in the States. So yeah. Compare both and what's the difference between those two types of assets or investments?
Well, gold is the lowest risk way to play the commodity. Owning the physical, I mean, whether you can do that directly or through an ETF. And the thing is, once you own that ounce of gold, it doesn't grow, right? And there's storage costs associated with it, right? And you get that unmitigated exposure to the gold price. But because you don't have exploration upside, it doesn't grow in size. So by owning a royalty company, you own a royalty not only on the existing reserves of the underlying operations, but any growth or exploration. So you get leverage to exploration success. And you get leverage to the gold price unmitigated as well, just like you would with physical, because you're protected from operating and capital costs.
Yeah. As a CEO, I'd like to know as well a little bit more about the challenges. What are the biggest challenges you face? And what do you enjoy the most as well about the job?
Well, the challenge and the thing I enjoy the most are the same. The challenge is trying to find new opportunities to invest in.
Right.
But that's a joy. To go out there, to do due diligence on multiple opportunities, to populate our pipeline so that our team is busy evaluating things, comparing them, and then executing on the acquisition.
Yeah.
Nothing is more joyful after you've gone through a long process of diligence to execution. If you're so lucky, because since our IPO 3 years ago, We've looked at 350 opportunities. We've executed on 10.
Wow. And so let's go back on that. You touched on the IPO. How was Gold Royalty started? Like, bring me back to how it was created at the beginning.
No, an excellent question. I met a gentleman named Amir Adnani, who's my co-founder at Gold Royalty. He runs Uranium Energy Corp, Uranium Royalty Corp, and he's a prolific mining entrepreneur. And one of the vehicles he had was a company called Gold Mining Inc.
Right.
And Gold Mining Inc. And Amir, you have to understand, is a consummate value investor. He's been an overnight success in the uranium business, 20 years in the making. He waits and waits and waits, buys the assets cheap, and waits for the market to come around. Did the same thing with his gold vehicle, Gold Mining. He bought a dozen development stage assets in the Americas with collectively over 30 million ounces of gold equivalent resource. He bought a number of them out of bankruptcy. So 10 cents on the dollar. So, and then he waited. He waited, and in 2019, the gold cycle started to turn. And he met me, and I met him. And he said, I want daylight value on these assets now. I've held on to them, now I want to work them. So I helped him hire a team, the Gold Mining Inc. out of Gold Corp, led by Alistair Still, who worked with me. And then we wrote royalties on each of those development stage assets. They created Gold Royalty Corp, spun it out. And to this day, Gold Mining still owns all the shares they had in the IPO, and they've actually added to their position. They own about 13% of the company now.
Right. David, I'd like to know, Gold Royalty just announced a recent news, very exciting stuff. Can you expand more on that?
Well, it's been a long line of transactions since our IPO. So when we did the IPO in March of 2021, we were looking to raise $30 million from those 18 royalties that we had. None of them cash flowing, but they, huge mineral endowment. We raised 90.
Right.
We had a $140 million order book.
Wow.
And so we had a very strong currency coming out of that IPO. And we used that to start to roll up our peers.
Right.
We bought 3 other companies, royalty companies, in 2021. Ely Royalties, Golden Valley, and Abitibi. That added 150 royalties to the portfolio, some of them cash flowing. Since then, because there's been a significant derating in gold equities since early 2022 when the Fed started tightening, we stopped doing M&A. Our currency wasn't there. So we had to focus on other platforms for growth. We've done project financings. We've done third-party royalty acquisitions. And we also generate our own royalties organically.
Right.
And the most recent third-party royalty acquisition was a copper stream on the Vares copper mine in Bosnia. And that has a 100% stream on the copper produced from there. And we acquired it for $50 million from Orion, a private equity firm. And they took stock and cash back in return.
Right. I'd like to know, actually, what is the driving key asset in your portfolio right now?
Well, there's a number of them. We have a number of Cornerstone Assets. We have royalties on 3 of the 5 biggest producing gold mines in North America. Canadian Malartic. And as they expand underground into Odyssey, we have significantly more royalty coverage. We have a royalty on Cote, on the highest grade portion of the open pit. And it's in production now. It represents significant growth in the second half of this year. And we also have a royalty on the underground extension of Goldstrike, the biggest producing gold mine in North America.
Right.
So some really prolific long stage assets.
Amazing. So David, we're running right now while doing the interview. How important is physical activity and running to you? And what does it bring to even your work, how does it help you?
I think it makes my brain work better.
Yeah.
But running is not the only thing I like to do. I like to cycle. I cycle a lot, probably about 5,000 or 6,000 kilometers a year. And I do bike races, and it allows me to compete in a non-professional way, play games like you did when you were a kid.
Yeah.
And I think it keeps your brain moving. I enjoy it immensely.
Yeah, definitely you have that competitor in you, right? In sports, and then also in your company, in your business.
I think we all do in our industry. There's a high degree of competitiveness. I think it's healthy.
100%. Earlier, actually, we were doing an interview with Jose from O3.
Yeah, Jose Pesquera. Yeah, sure, I know him well. I know his family well, Benavides.
Oh, nice. Yeah. He was saying a story, actually, about they went to Colombia, and there was like some kidnappings. And that's like, there's a lot of risks to, like mining that like some people don't see. And I think the companies go through some crazy things. Do you have any stories that either you've heard or you've seen of like some type of stories like that, someone getting kidnapped or like the risk of the business,
Yeah, certainly. I mean, none of our operations are in safe urban centers. They tend to be in remote areas, quite often in the developing world. And I remember back in the 1990s when I was within Med Mining, we were developing Antamina in Peru. And at that time, it was the early days of the presidency of Fujimori.
Right.
And so it was not a very safe place. And we went down with a large group of bankers and investors. And we had ex-CIA operatives providing security for us.
Oh, wow. That's the whole operation.
And yeah, and there was a lot of drive-by kidnappings occurring at the time in Lima. Obviously, it's much safer now, but back then it was just opening up. And the Shining Path was still active. So certainly, it's not unusual for us to go where others fear to tread, because that's where the minerals are.
Yeah, 100%. I'd like to know as well, in terms of investors or speculators that are looking to invest, what are like the main reasons why they look at your company and what really makes it stand out? If you could just name like 3 quick reasons.
Yeah, for sure. I mean, number one is the diversity of our portfolio, over 240 royalties with over 120 million ounces of gold exposure underlying those royalties. And 80% of them are in the safest jurisdictions in the world, Nevada, Quebec, and Ontario.
Right.
From the standpoint of mineral potential, low political risk, and low regulatory risk. And that portfolio is completely bought and paid for. We don't have another capital call in it. We have very low G&A costs, and we have 60% compounded annual growth in our revenue right to the end of the decade.
Right.
And that means immense free cash flow growth. This year, 3 years into our existence, is our first year of positive cash flow.
Amazing.
And positive earnings.
Wow. For a startup company, that's definitely very impressive.
And it's just the beginning. Because as I said, we have exponential revenue growth right through the end of the decade, and we have flat G&A costs.
Right. So exponential revenue growth, definitely. I want to know as well, in terms of macro of where the world is going right now, how does that impact your business, either positive or negative? There were some bans for I think uranium in Russia and importing it. Can you expand more about like those macroeconomic situations and how it impacts like the business?
Well, I think the most important macroeconomic variable right now is inflation, and it's far worse than the headline numbers indicate.
Right.
It's not 3 or 4%. That's economic science fiction. We're all experiencing 15 to 20% inflation on the ground.
Right.
And gold is agnostic and accurate barometer of that inflation. The reason the gold price is going up, even as the US dollar is going up, is because it's telling you there's lots of inflation. And so being in the royalty business is the best of all worlds. It gives you unmitigated exposure to the rising gold price while protecting you from inflation.
Right. So for Gold Royalty Corp, I'd like to know what are the upcoming catalysts? Like, what are you looking forward to do? I know you are talking about exponential growth in terms of revenue, but what are the next milestones coming up?
Well, this year alone, we have 160% growth in revenue. And that's a $2,000 an ounce gold. At these gold prices, is going to be far higher.
True.
And this is the year we deliver positive free cash flow, positive earnings, and it's a down payment on the massive growth in earnings and cash flow we have going forward from here.
Right. David, do you have any comment as well on the gold prices? I know we did just talk briefly about them. You said with $2,000, that's kind of what you were looking at and probably how you did most of your numbers in the company.
Yep.
And so where it's going right now, I don't know, you can't predict the gold prices, but can you explain a bit like how the gold prices move with inflation and economics and all that?
Yeah, look, gold has been a one-way trade for 50 years. Go back to the early 1970s when the US government abandoned the gold standard. Gold was $35 an ounce. And now there's been a lot of volatility between then and now, but gold's now $2,400 an ounce.
Right.
The purchasing power of the US dollar has declined 96% since that time.
Crazy.
Where were you better positioned? Holding a dollar or holding an ounce of gold?
Right.
Far better off in gold. And I'd say the ingredients are in place now for a far bigger performance in this cycle than the last big inflation cycle in the 70s. Because back then, inflation or debt, the GDP was only 100% globally.
Right.
Today, it's 350%.
Yeah.
So there's very limited latitude with the central banks to bring interest rates higher to tame inflation.
Right.
They need the inflation to gallop in order to inflate that away.
Right.
So gold is going to far exceed its real all-time high, which is not the 2,400 we're experiencing today. Back in the early 1980s, it was almost $900 an ounce. If you inflation adjust that to $24, that's over $2,800 an ounce today.
Right.
So we're far away from the all-time high, but we're going to go far beyond that.
Right. Amazing. There's an argument that can be said, gold, like this whole value, it's a hedge against inflation. It grows, etc. But it's kind of hard. Let's say hypothetically we were in a war or something. You can really run away with a bunch of gold. But with all the digital assets, like digital currencies, cryptocurrencies that are coming up, there's some argument that could be said, and some people think that way, that, they're better off like investing in a cryptocurrency like Bitcoin instead of gold. Do you have some comments on that?
So if the world really does go terribly, you can go in any corner of the universe with an ounce of gold and people will understand the intrinsic value of that. What would you do with your digital currency in the jungles of Papua New Guinea?
That's a good argument to make. Good argument to make. All right. Before ending this interview, I'd like to know if you have anything else you'd want to add to the audience, anything else you want to say?
Well, look, you're going to get a far greater leverage to a small and growing royalty company than you are the bigger ones. The bigger ones are great. They get incredible valuations, typically 2 to 3 times net asset value. Where's the upside from there? We're trading at, by consensus estimates, about 0.5 times net asset value. And we have a portfolio of assets that's the envy of all of our peers in the best jurisdictions, the largest assets in North America.
Right. So GROY, Gold Royalty, check them out. We'll have the links in our description of this video. Thanks so much for the interview, Dave.
All right. Thank you.